birdies in the background. So
Oh yeah.
yeah, so I can hear the birds in the background. That's too funny. So, all right. So we got the door open, which is good. And we'll get everybody in here, and then we'll get talking about how this one's going to go. Unique because we'll be going through a form, but nonetheless, still good stuff. Cool. Got a couple people in the room already. Hello, hello. We're going to be using a personal budget form that everybody in attendance should have received a copy of. If not, let us know. And Tony will get you one. And it looks like, what did she do? Oh, she put a link in there. So that's cool. Okay, also good place to put any questions that you guys might have on the budgeting. I am going to introduce myself, talk a little bit about the budget, and then we'll get into how to use this. So guys, my name is Rich Kimball. I'm with Cross Country Mortgage, and it's a little early. It's only 10:14, but I guess I'll give you a little background on how we got to this. Then we'll talk about why I think it's important. So I've been in the mortgage space for over 30 years. And one of the things that I have found is that in working with clients, I am probably more exposed to clients' financial data than anybody else in their life. Their tax man doesn't see their credit report. Their investment advisor typically doesn't even see their taxes, let alone see their credit report. We see everything. We see savings, we see everything. So in doing so over the years, in 30 plus years in mortgages, we've decided to create some classes to give back. And by giving back, one of the things that we want to do is make all of our business partners and our clients, and we even do this budgeting class with our employees because we think it's really important, but we want to make them stronger financially, and the stronger or the more financially fit that you are, the better you are to handle what life throws at you. And possibly the better or easier you can get to that $1 million that you want to have in your retirement account. So some of the books that have inspired me relative to the use of this form, there's some great books out there called The Latte Factor. There's another great book out there that I would highly recommend called The Richest Man in Babylon. And then the last one is the Millionaire 1 Minute. I got to get the right title. Tony, do you remember the title for that? I know we've given away some books for that. So
Off the top of my head, I can't remember the name of that one. I'll find it.
well, yeah,
I'll put it in the chat.
All right, throw that one in the chat. So okay, cool. So Maria wants the titles of the book, so we'll put them all in there. We'll put The Latte Factor in there. We'll throw The Richest Man in Babylon in there. There's a concept in those books that talks about paying yourself first. And while that sounds really good, there's no way you can do it unless you know what's coming in and what's going out. So we've lived our life, my wife and I, on that concept of paying ourselves first. And sometimes paying yourself first may not be savings, it might be paying down some debt. So when we're going to talk about good strategies for that as we build out this budget form. Let's see here. The other reason why I really like this form, typically in a 2-person household, there's one person that handles all the bills. And regrettably, one of the leading cause for divorce is money. And I think this form also helps in that regard, because the person that pays the bills can use this form and then sit down. It takes less than 5 minutes to tell the other party in the house, hey, this is what we had coming in, this is what we had going out, and this is what we were able to ideally save. And we'll show you what the form will look like. And we're going to actually show you guys how to use the form. But I think it's really good. And then the other thing about the form, once you see what you're spending, you see what you're making, and you see what you're saving, you could make small, minor improvements. There's a Japanese term out there called Kaizen, and that's making one small improvement every day leads to great gains over time. We can also make small improvements every month when you're doing your budget, like, hey, I don't need to do that. It would be great if I save this. So these are some really good tips as well. All right, so we talked about that, and relative to this form. So we're going to talk about the form. Now, this is a form that you could certainly use digitally. I believe Tony's provided it to everybody digitally, but you could print it out and write it out if you want. I believe in the format that we use digitally. I'm going to share a screen right now so I could show you the form. There we go. All right. So I believe in this, the way that we did this form, you can actually tab it over and go from month to month. And there are some features that are cumulative as we go month to month. So as you're going to be adding savings and things like that, you guys will be able to, you don't have to go in and manually do that. And I need to do one other thing. I need to make sure I got a chat box open so I could see any questions. And I want you guys to ask any questions that you have. Let me just coordinate my screen so I can do, my chat box blew up. So hang on a second. It's like half my screen now. So, all right, that's better. All right, perfect. So we got the titles in there. So, and also, and by the way, thank you, Maria. We do want this to be interactive. So if you guys have questions as we're going, please let us know. I was commenting on one thing relative to this version of the budget. There are apps out there that you can use. There's one app out there, Tony and I were talking about it before we opened up the presentation today. There's an app out there called Mint, M-I-N-T. That app is actually very well regarded. It's very highly rated in the Apple Store, in the Google Play Store, and even Tony has said that she's used it. I believe the app is free. So if you're a little bit more technical savvy and you want to do that, there are other budgeting apps that actually even link to some of your accounts so you don't have to manually put some things in there. I think you take this at the level you're comfortable with. At minimum, though, have some understanding of what's coming in, what's going out, and where you are. So where you are from a scorecard standpoint, you're going to be able to measure that once we go through the form. So, all right, let's get into the form. So you guys can see this is our personal family budget form, and it's for the month of June in 2022. The first column I always like to start off with is column F. And that is basically what is the amount of money coming in. And I, by the way, have a completed form that I'm going to be referencing so I can make sure all the numbers balance out. But I'm going to add this up and show you guys this. So notice it's July today. We're addressing June. Why did we wait? Because we want to make sure all the income that came in June is accounted for and all the bills you paid in June are accounted for. So somewhere around the month of July, we're going to actually see what happened last month, and it's going to help us be able to make changes that we need to make. So first things first, for this particular person, example, we have their payroll checks. So any paychecks should just all be lumped in here, but also in column F, we want to include any other things that came in from cash. So we're going to put in here, I'm going to make a little note. These might be one-time things, like maybe we got a gift from our grandmother. Very nice of her. Maybe it was a birthday gift. Maybe it was $100 and we actually deposited the $100. And we also had, maybe we've got a side job. There's a lot of people out there with side jobs and side hustles and doing DoorDash and Uber and selling things on eBay and things like that. So maybe we've got a side job and we've got a little bit of income that came in off of the side job. In this column, we want this column, even though it says total paychecks, it's really for all the income that you have coming in. So we've got essentially our paycheck. We've got a couple of other little one-time items, and that's going to take care of that. Now we want to kind of move over to the minimum amount owed. So that's in column C. Now, under minimum amount owed, the reason I say minimum amount is because, as an example, your charge card is going to have a minimum payment due. That's the payment we're going to put in there, but it might not be the payment we pay. I'm going to show you how that works. So first and foremost, let's start with everybody's biggest bill. It's their house payments. So one thing that I like to do in the house section is I also like to put in the balance of the debt or the mortgage. So it's kind of an add-on thing, but it gives you an opportunity to say, hey, this month I only owe $98,241 on my mortgage, which is great. My minimum mortgage payment is $1,154, which is also great. But you know what? I'm kind of savvy. I rounded that up to $1,200. Now, if I rounded it up to $1,200, it means I actually saved an extra 46 bucks. Why did I save $46? Because that money came off of the principal. So this is one good place to kind of track something like that. So any questions on that, let me know. So again, we've got our house payment. By the way, if it's just rent, it's just rent. It's cool. There's no balance there. You show the amount rent. You're never going to have an overpayment. And so we're not worried about any extra money saved. Next thing we've got is we've got our automobile loan. Most people have car loans. So we're going to put our balance in here. It's $78.55. And then we've got a $299 payment. And in this particular case, we didn't send any extra money. We just paid $299. So we're just going to leave that there. In this example, we don't have student loans, but certainly that's a good place. We do have credit cards. And again, I'm going to use the little section on the side to show what our credit card balances are. So they owe about $442 in credit cards with a minimum payment at $40, but they're the type of folks that pay off the credit card at the end of every month. So that all that money went and we're paid off. Now, did we actually save any money by paying off the credit cards? No, because we didn't really build any equity in anything, but we did get rid of the debt. So I do not count paying off the credit cards as amount saved because again, we didn't build equity in anything, but we did get rid of the debt. So it is important to note. All right, and one last little item we're going to throw in here. Our buyer or our person in this example, they've got a condominium association due. It's $150 a month. They paid $150, and that's that. What about cash back? Oh, Maria, great question. So what about cash back on a credit card payment? So I believe you're talking about some sort of credit that you might get. I would actually show any kind of cash back on a credit card payment right here. So let's say you got a check. I know like with Costco at the end of the year or once a year, they're like, hey, here's all the points that you earned off of your Costco account. That's a check that we get, and we do a lot of business charging through Costco. So we usually put that. So if Costco would have given us a refund check for 400 bucks, that's going to go there. Now, Maria's talking about it's typically a percentage. So if you get some sort of credit on the charge card and it's not actually a deposit into the bank, I wouldn't show it on the form. I would just show a smaller balance if the credit's right on your statement. So it never passed through your checking account. That's kind of the impression that I'm getting. So if it doesn't pass through your checking account, we're not going to really put it on the budget. I would just show the smaller balance after the credit you got for the points. Now, if they're sending you a check, that's a different thing. So, all right. Now we have to go down into, now we've got other bills. So again, these are minimum payments. We've got electric bill. We're going to show that in here. We've got a gas bill. We'll show that in here. We paid $88. And bear with me, guys, while I pay this or note all these things that we paid on. And cable is $129. Cut the cord, people. Just kidding. All right, so we don't have a sewer bill because the association takes care of that, but we still have some water that we pay. Maybe we get bottled water, who knows? All right, and I'm gonna bump down to insurance at $70. So $70 for insurance. And that could be your car insurance. Then we've got internet at 99, internet at 99, gas. I had 240 when I started this, but who knows if that's enough these days with gas going up. Groceries, Put those at 500. Now, by the way, guys, I'm using round numbers. I would ask an employee to use exactly the numbers you look at, that, you know, go into your checking account statement and say, okay, this was groceries, this was groceries, this was groceries. The other thing that I'm going to add on here, and again, if you have expenses in here, let's say you've got expenses in here like dining out. So I'm put dining out, which should always be an expense for most of us. We like to go out a little bit. Put the dining out portion, and maybe we've got some medical expenses. Maybe we've got some doctor bills. Maybe there's you've got some babysitting bills. Sorry, doctor bills. 125, 125. All right, what do I got here? All right. So on our giving, now, this is an important part. I actually like this section of it because I know a lot of us would like to be more charitable. And I like to track it. And we've got a place down on the bottom of the form to track it. But I like to track it. But the one thing about giving is not part of your minimum amount owed. So if you give because you want to, you can, and you have extra money. So I am going to put that we gave $50 away, but it's not part of our minimum expenses. Now, by the way, there are some people that are greatly invested in tithing. So they don't care no matter what, they're going to tithe. It's part of their minimum expense to pay that $200 a month towards church. If that's where you are in the world, put it in there. Like, it has to happen, you can put it in there. Ultimately, for most people, giving is just something that they do. And one last thing about giving, giving can be something like helping somebody out. Maybe somebody's, maybe their washing machine broke down and you were able to pick up a cheap washing machine at your friend's store and you bought them the washing machine and it was $200. I'd put that down. It doesn't have to be a check written to the Salvation Army or United Way or one of those places. So enough about giving, but we do like to track it. Spending money. This might be some of that smaller stuff that just kind of gets away from you. Maybe it's a cup of coffee, maybe it's something else. But I would just put maybe it's just fun going to the movies or whatever it is. But I'd give yourself a little bit of a budget and a little bit of leeway not to overanalyze everything that's there. The one thing about the budget portion of it, this isn't about, and I should have started the conversation or at least included that in the beginning, which it's not about telling you what not to spend. Like, don't do this, don't do that. This is about just tracking it and having a better understanding. And if you have a better understanding, you know, it's a boat with a sail and a direction and a compass, as opposed to, hey, I paid all my bills last month. Cool, I survived. That's a boat with no compass, no sail, and really not going to get anywhere. This form will help you achieve your goals. All right, so we've covered that. I want to scroll down and we've got some interesting things that are coming up. Any questions about that? I know I went fast through some of these tedious little bills, but we wanted to fill the form out for you guys to show you how it works. Any questions about that? And then we're going to get into some fun stuff. Fun stuff like savings. So, in this particular situation, our borrower was able to put, or a borrower, hello, our budgeter was able to put $280 into their money market. So, by the way, that's not a minimum amount. Has nothing to do with their minimum amount to just pay their bills for that month. So it's $280 in the money market, but it also goes under column E, which is the amount of money we saved. So if we sent $280 to our money market, we're going to put the $280 there as well. Now, we also have a 401k. Now, interesting thing on the 401k is we've got $304. I don't know why that came up in bold, but anyway, we have $304 in the 401k. That money didn't necessarily, well, here, I'm going to put that $304 went to 401k. This is money you're going to find on your paycheck stubs. So you may have to pull your paycheck stubs for the month of June and go see what you deposited in the 401k, you're not going to get it out of your checking account, in other words. Now, the interesting thing about the 304 is it goes in all three columns. It's the amount of money that was actually paid out. So it got paid out somewhere, went into your 401k. It became part of your savings number. And it was actually also part of your income. It just didn't show up in your checking account, but it does show up somewhere that you have it, and it's $304. Now, you have access to a 401k. This is one of the things that we do teach a wealth workshop, and we'll have one coming up next month. I believe Tony will put the date in there. But under the wealth workshop, what we talk about is we have what we call a wealth accumulator. And in the wealth accumulator, we talk about different things you need to do to build wealth. And one of the things we strongly believe in is 401k. And I'm going to tell you a little bit why here. So we've got $304 that came out of this person's pay. Now, based on this person's income, they're probably in a 29% federal tax bracket. State of Illinois is going to charge them, I think, another 5%. So it's about 34% in income tax that they didn't have to pay on this $304 because it came out pre-tax. So they're literally ahead 35%, 34%, but they're literally ahead 34% because if they would have had to make this investment in after-tax dollars, the investment itself would have literally 34% of $300 is about $100. They would have only put $100 away instead of $300 away. So the investment return, regardless of what's going on in the stock market, we're going to talk about that in a second. The investment return already is 34% because you saved it by not paying taxes. Now, one quick thing, I'm not a licensed financial professional. I'm not going to tell you where to put your money. I'm not here for that. I am here to tell you that if you have access to a 401k, it should be one of your priorities. Now, one thing that we're going to add to this, we have 401k match. Now, one of the nice things is most companies will match 50% of what you put in your 401k. So if we get 50%, that's another $152 on top of our $300. Now, what is our investment return? We save 34% in income tax, federal and state. We gained 50% from our employer because they gave us a 50% match. Some employers are more aggressive, but on average, it's about 50%. Here at our company, we help our employees out by giving them a 50% match up to the first 6%. But that's extra money that they made. Now, the other thing with that is if they go into the stock market, the S&P 500, which Warren Buffett, you may or may not have heard of him, very, very famous, well-known investor, says the S&P 500 is one of the greatest investments ever. Average rate of return over the last 9 years, 9%. You can make another 9% on this, what is this, $456 that you just put away for 1 month. So pretty powerful stuff. And but I wanted to break it down what it's going to look like here on our budget. Now, a couple things with the budget. And Tony did put, we have our financial wellness class, which we also talk about for our clients that we closed a loan for recently. We go advertise it to them as we got you into debt. Now let's get you out of debt. So anyway, if you want to check that class out, we'll talk more of some of these concepts in there. We're done. So we have, what is it, 1037. We've completed this form. Now I've done it many times, obviously. It might take you a little longer the first time, but it gets a lot easier as it goes. A couple things I want to point out here. So we got columns. We've got the minimum amount owed in column C. So we know that it actually is going to take 200 spending. What do I want to leave in there? Yeah, it's fine. So we know that we've got about 3651 that is the minimum amount of money that it would take for this person to survive for the month. So 3651. Now this form automatically calculates a 3-month reserve. So it'll take whatever this number is, and it's going to change from month to month, obviously, but it's going to take whatever this number is, multiply it by 3, and give you what you should have in the bank if you want 3 months reserves. At minimum, everybody should carry 3 months reserves. Now, in our example, our person doesn't have 3 months reserves. I just typed out what their money market balance is right now, $3,975. Do not beat yourself up if you don't have 3 months reserves. Just begin to track it. Again, you are now with this form, you're a ship with a sail, a rudder, a compass. You know what the goal is. The goal is get this number up to $10,953 because that's your 3 months reserves. Now, one quick thing on the number of months reserves. If in fact you're in a job that might take longer than 3 months to go replace, and some people are, maybe there's very limited amount of job openings in their area of expertise, and they know it's really probably a 4 to 6 month window, then they should have 4 to 6 months worth of reserves, or at least be working towards that. Okay. Next column I want to talk about is the amount of column D, which is the money that went out for the month. Can't talk, sorry about that, guys. So this number at 4885 should always match the amount of money that came in. So amount of money going out for the month should always match the amount of money coming in. So the 4885 and the 4885, they should always match. Now, interestingly enough, we were actually able to obtain savings of about $782. On that $782, that worked out to be about 16% of what this person actually brought home for the month. You should have a goal. The ultimate goal is save 20% of your net earnings. In some of the books that we reference talk about that. If you're able to save 20% of your net earnings, some people are not going to be able to do that coming out of the gate. Some people have credit card debt. And I mentioned before, I was going to talk about how we deal with credit card debt. My opinion on credit card debt, a lot of people will tell you, get rid of the debt, get rid of the debt, get rid of the debt. If all you do is worry about the debt, you don't create any savings. The minute you have a life circumstance, you need new tires, something happens, you have to emergency, you got to fly across the country to visit a relative. Something happens like that, without an emergency fund, that's going on your credit card. So it kind of perpetuates that credit card debt. My recommendation is when you have a tool like this or Mint or something where you can watch your income, when all the minimum payments are made and you know you have excess money, you take 50% of that excess money and you pay off the credit card. The other 50% of the excess money goes into building your reserve account so that when life happens, you don't have to go back to the credit card. By the way, I'm not saying pay them off and close the credit cards. You need credit cards to have the best possible credit score, but you don't need credit card balances. You just need a little bit of activity. All right, so we talked about the fact that this form will show you what percentage that you saved. It's already built in the form. So in this particular case, there is a cumulative formula in here that will add up the 782 to what you paid the month before, what you paid the month before, and it'll start showing you how much you saved for the year, which is pretty cool. Again, it's you now have a compass like, oh my gosh, I was actually able to save $3,000 this year. And it gets a little contagious. Like, hey, I want to start saving more money. What do I need to do that? Okay, so we talked about their cash net worth. There's one thing I want to add. So we got a 401k balance. So we're actually going to show that they were able to build so far. They have, and is there anything else? Oh, here we go. We also want to put this, and I'll tell you how we did this in 1 second. There we go. All right, so their current 401k balance is $12,584. They do have a mutual fund that they started, and they're doing that in addition to the money market. So they're doing that in addition. They've got a mutual fund that they started investing in. My recommendation, S&P 500, not doing individual stock picks. But again, you'll learn more about that in the wellness class we do in August. And then they've got equity in the home. And by the way, the equity of the home, that is part of their net worth. So these things transfer over here on our form. We show you that this particular borrower has a cash net worth of $17,000 and has a total net worth of $49,000. And there's also a place to put equity in rentals. If they did own stocks, there's a section for that. And like we talked about in the beginning, there is a place to track your giving. So it's an important part of my wife and I's life is to track our giving. And I think it's really important if you want to track your ability to pay it forward, it's a great place to do that. So this is our budget form. And these numbers then on the form will start carrying over so you don't have to manually add up. But this is the form that we've used for the last 5 years. It's a great way if you're doing this, filling this form out, and then you go visit with the other person that's in your house and say, hey, look, this is what we did. This is what we're able to save. This is maybe what we got to work on. And you go from there. There is one other app I want to mention in here. Tony and I were talking about it. If you're trying to create a situation where you have some forced savings, let's say, there is an app out there called Digit, D-I-G-I-T. In Digit, let's say you're saving for something, or maybe you want to start automatically building up that reserve account. Digit is an app where you can actually set it to pull $1 a day out, $5 a day out of your account and put it into another account. Not like you don't have access to that other account, but it starts pulling that money out. So your savings becomes automatic. And those are things that are covered in books like The Millionaire Next Door. Again, I don't know that we found the name of that other book. Let me take a look, see if I've got it on my bookshelf over here. Latte Factor. Oh yeah, it is. That's the 1 Minute Millionaire. So the 1 Minute Millionaire, it is on my bookshelf. All right. So with that, if nobody else has any questions, we do have a copy of the Latte Factor that we are going to send to Maria because she actually was participating, and we really appreciate that. Maria, we will reach out and get you a copy of that book. We thank everybody else for attending and attending our class that we've had here. Again, we do a lot of things like this. We've got the class in August coming up, August 20th, 9 a.m. It's going to be a Zoom class. We won't cover the budget form, but we will cover the wealth accumulator as something that we'll be teaching all of our clients in every application coming up as well. So there's no other questions. I want to thank you guys for attending on a Saturday morning. Have an amazing weekend. If you know of anybody that's thinking of buying, selling, or refinancing, and they want good, honest advice, please reach out to us here at the Kimball team at 847-603-2300. Take care, guys. Take care. Let me end the share. So I got to move this out of the way. Oops. There we go. Take care, guys. God bless. Have a great weekend. Bye-bye.